Hi, it's Corey Chambers, your home sold guaranteed or I'll buy it. Thanks for taking a minute to listen in. In a moment, I'll share with you some valuable information about this topic. Real estate market versus the everything bubble. If you see any properties that are of interest to you, let us know. We will gladly send you a property information packet on any loft, condo, or house, or we will arrange for a private preview upon request. If you have a home you'd like to sell, you should know that I will guarantee the sale of your present home at a price acceptable to you, or I'll buy it for cash. This will allow you to buy your next home without worrying about selling your present home. To find out how much you could sell your home for, call me at 213-880-9910 now. So this is a blog post that we did February 20th, which was just a month ago. A little over a month ago. And this has turned out to be a very important, probably the most historic blog posts, articles that we've done about real estate in Los Angeles, real estate market versus the everything bubble. Because a little more than a year ago, we were telling people in December, for the past couple of years, we let people know that home prices in downtown Los Angeles were falling, the market was falling, and so forth. But usually people don't, people move when it's convenient for them or when they want to. They especially get motivated when, if they're having something personal in their life, such as if they just lost their job, or they might lose their job, or they're running out of money, or they just came into a lot of money. Or sometimes if they see that everybody in the market is going crazy or piling on, then they will sometimes get motivated by others in that case. So we're going to start seeing more of that happening, where people see that, everything's crashing, I guess I should sell my home, or I need to sell my home. So that's where we're the stage that we're at now. Well, we were not at that stage just 5 or 6 weeks ago when I did the real estate market versus the everything bubble blog post. So here it is. More signs appear that the strong housing market has begun to butt up against the bursting of a major economic bubble. So you can see dot-com bubble done in 2000, housing bubble that happened in 2008, and the everything bubble that was happening in 2018. The LA Loft Blog recently reported that December brought the biggest U.S. stock market drop, along with the slowest downtown Los Angeles real estate market since 2008. December loft and condo transactions numbered only 22 in 2018, compared to 63 properties sold during downtown's peak December 2014. The measurable weakness now shows increasing negative impact in downtown Los Angeles real estate as public opinion begins to head south. Fragile market. Experts who predicted the 2008 crash, permabears like Mike Maloney, and free market economists like the New York Times bestselling author Doug Casey, they're all in agreement with the Casey report chief analyst Nick Giambruno in warning that the Federal Reserve is set to pop the everything bubble. They say it will trigger a market collapse of epic proportions. Take a look at what the Buffett Indicator says about stock and real estate markets in Mike Maloney's Market Fragility video. Take a look at it by clicking on that link there at that video. The Federal Reserve's current rate hiking cycle, which started in 2015, is set to pop the everything bubble. If the Fed does not pop it, then something else will. James, that something else, by the way, we know at this point is the coronavirus. So that has popped the Fed's bubble and let all the air out of the Fed's power, basically. James Stack also warns of inflation risk, which could cause interest rates to rise and home prices to fall. So even if the Fed, they've lowered their interest rates to zero, we're not going to get, for you and me, we're not going to get zero rates. We're going to see good rates for the time being, but that could still turn into massively high interest rates and inflation over a period of time. 2018, the everything bubble. Casey Research and many others believe that another crisis is imminent. So this is just over a month that we gave this to you. As you already know, the Fed responded to the 2008 financial crisis by creating unprecedented amounts of easy money. Think of the trillions of dollars in money printing, but done electronically, called quantitative easing, QE 1, 2, and 3. The Fed effectively took interest rates to zero, and the lowest they've been in the entire history of the United States. So we're not talking about something minor that the Fed is doing. We're talking about major, extreme, radical behavior by the Fed. Free market economics says that this radical monetary policy must eventually lead to an equally radical punishment to the U.S. economy by free market forces, just as it has been done for Europe and Japan. The L.A. Loft Blog agrees that there is no way to stop free market forces, because if they cannot occur openly and legally, they will happen covertly and illicitly, as Venezuela has most dramatically proven every day for years. Now the Fed has created enormous, unprecedented economic distortions and misallocations of capital. It's all going to be flushed out one way or another. Because the size of the financial meddling, the result must be an even bigger crisis than 2008. So the trillions of dollars that the Fed printed, the Fed created not just a housing bubble or a tech bubble, but an everything bubble. For perspective, the Fed inflated the housing bubble with about 2 years of 1% interest rates. So it's hard to fathom how much it distorted the economy with 7 years of 0% interest rates. The Fed will pop this bubble too. The Casey report predicts that this rate hike cycle is going to pop the everything bubble, which again has just popped. The Fed has encouraged malinvestment by suppressing interest rates lower than their natural levels. This leads companies to invest in plants, equipment, and other capital assets that only appear profitable when borrowing money is cheap. So for instance, when the Fed does this, it makes things, and Trump and other people start spouting how this good economic news, but even if they're trying to give correct information, they can't because of the Fed's artificial low interest rates. And the Fed's, that's one of the biggest problems of the Fed and their fake low interest rates, is that all the businesses, the smartest people, the very smartest economists, smartest business people, smartest CEOs, the ones who are very smart and very honest, they cannot do their job because they have no accurate information. It's too hard to calculate all the damage and screwy things that happens when the Fed creates these artificially low interest rates, because they cause chaos. I think you can kind of calculate it, but the economy is already hard enough to calculate as it is, and then that just really puts it into impossible territory. But it actually causes behaviors that are incorrect, as we just mentioned. Misallocation. So let's see. Misallocated capital, misallocation has extended to everything, including real estate. Did I read this paragraph? The Fed has encouraged malinvestment by suppressing interest rates lower than their natural levels. This leads to companies to invest in, yes, we read that already. And real estate, this misallocation, again, has extended to everything, including real estate. So there's really no way to know. You used to be able to know how much is a property worth by what are other people paying for it. You still have to go by that, but it's all distorted because of the Fed and the interest rates. If interest rates were allowed to be normal, such as they usually are around 6%, then the price of a home might only be, 80% or even 50% as much as it is now. So if it seems like a loft that I live in that's, $550,000 should be $275,000, then that's probably true. Warning signs. Earlier this year, the Turkish lira lost over 40% of its value. The Argentine peso tanked a similar amount. China is experiencing dramatic slowdown, which by some measures shows the slowest growth since 2005. The weakness in China is also locally visible when taking a close look at slowing sales at downtown's Chinese-built condo projects like a Metropolis. along with construction delays at Oceanwide Plaza caused by a delay in funding from China. Trillions of dollars in easy money have fueled the second longest economic expansion in U.S. history, as measured by GDP. If sustained until July 2019, which that's already happened, it'll become the longest in the U.S. history. So we've now surpassed the longest economic expansion in U.S. history. It has become the longest in U.S. history. By historical standards, the current economic expansion will likely end before the next presidential election, which that already came true. Recessions are inevitable. Longer expansions can fuel greater recession potential, just like overfilling a water balloon creates a bigger and unpredictable explosion of wetness. So the wetness explosion just began. Earlier this year, a U.S. stock market broke the all-time record for the longest bull market in history. The market has been rising for nearly a decade straight without a 20% correction. Meanwhile, stock market valuations are nearing their highest levels in all of history. The S&P 500's CAPE ratio, for example, now the second highest it's ever been. A high CAPE ratio means that stocks are relatively expensive. The only time it was higher was right before the tech bubble burst. Every time stock valuations have approached these nosebleed levels, a major crash has followed. So it was easy to say that we were near 100% chance of a big crash and recession, because every time, 100% of the time, stock valuations approach these levels, major crashes have followed. So and have followed soon. Preparing for the pop. The U.S. economy and stock market are overdue for recession, which we're now into the recession and into the correction by any historical standard. But when you add in the Fed's late rate hiking cycle, the same catalyst for previous bubble pops, the likelihood of a stock market crash of prehistoric proportions before the end of Trump's first term is very high. That's why investors should prepare now, 6 weeks ago. One way to do that is by shorting the market. So we were telling people that, to consider shorting the market 6 weeks ago. The people that did that while everyone else was complaining about losing $100,000 from their mutual funds and so forth, the people who shorted the market, like we suggested, were made 800% during the same time period while everybody else was crashing and losing their money. The people who shorted the market were gaining 800%. So we were telling people to consider on betting that the market will fall, which it did, and so people that did that made all that money. So this is how we keep telling people it's possible to make money, very large amounts of money in every type of economic condition. Every single type, every variation of market condition has an opportunity to make a tremendous amount of money. Simply put, the Fed has warped the economy, as I just mentioned, more drastically than it did in the 1920s, or during the tech bubble, or during the housing bubble, or during any other period in history. The Casey report expects the resulting stock market crash, the one that we're in right now, to be much bigger. Swiss bank UBS says many markets are already overvalued, including Los Angeles, San Francisco, New York, while Vancouver is at the greatest bubble, says their visual capitalist. Toronto has already been cooling for more than a year. It's actually been 2-3 years. Liquidate everything and move to cash. So here's quite a big suggestion right here. And this is 6 weeks ago. In a panic, stock owners can now hit one button to liquidate everything and move to cash. This works for big Wall Street firms who execute trades automatically in microseconds, but the typical small-time stock owner will experience delays and other costly setbacks during a major market drop. In other words, like we've been seeing over the last couple weeks. All markets, including real estate, are affected by recessions. Selling a home is a process, not an event. Because selling a property usually takes many weeks or months, cautious homeowners must consider cashing out or downsizing early before a panic can knock down home prices. So this is what we gave out just before the major panic. Also, people need to know that panics beget more panics. So anyone who says, oh, this panic is going to just last a couple weeks or whatever, and then it's going to bounce back completely, kind of like what Trump has been sort of saying. It has some truth to it, but it's more than likely not going to be altogether true because of subsequent panics and related panics that happen, subsequent crashes, related crashes that happen. And they may seem totally separate, they may seem totally unrelated, but they probably are related. Such as you can say that the coronavirus and the economic crash are not related, like Trump has sort of said, which of course is not true, because we told you there's going to be a catalyst. You got to have a catalyst. So when you need a catalyst, it causes the catalyst to happen, and the catalyst causes the crash to happen. So in other words, if you look closely enough, you can probably even determine that that the bubble caused the coronavirus to happen. Someone's probably written something about that on Google already. I'm not going to go into details on that, but if you look, you'll probably see that there are ways that things affect each other, even if they seem like they're not directly affecting each other. And that's the way economics is. When you do something crazy, something radical like zero interest rates, it causes a cascade of things to happen. It causes other things to happen, things that the people at the Fed who think that they are geniuses, a tremendous number of things happen that they are not even able to calculate. And because they can't calculate it, they just assume it's not going to happen, whereas really good economists know that there are things that we cannot calculate. Just like a good weather forecaster knows that there's things in the weather that you cannot calculate. All right. The good news is, interesting news, the most interesting news out of this is that computers are able to see all these patterns, and then they're able to see patterns of patterns that we really cannot see. And the computer does not even these days, because of artificial intelligence and other types of modeling based on that artificial intelligence, they're able to see these patterns of patterns of patterns. So they are able to see weather better. They're able to see also economic things. So the computers are going to be able to tell us things that are going to happen. They already are. They're telling that to Google. That's one reason why Google is just way ahead of everybody. Google's predicting the future like crazy. Google gives us some tools to predict the future, and that's one of the reasons why you see that the LA Loft Blog is able to predict the future in a lot of ways, and so are others, is because we'll use not only the direct statistics and calculations, but we'll use the indirect methods as well, including information that we can derive from Google's ability to predict the future. Market fragility. Experts who predicted the 2008 crash, permabears like Mike Maloney and free market economists like New York Times bestselling author Doug Casey, are all in agreement with the Casey report. Hold on. Did we already read this? Yes, we did. Oh, we've covered everything. So that's it. We've said enough. Here we showed how people were cutting back. So this right here says start cutting back, folks. And this was quite a while ago, 2019. 2019 should have been the year for cutting back. It has been for us. The LA Loft Blog has been cutting back. You can see that we actually moved CoreyChambers.com, turned off that website, and put it on the LA Loft Blog. So we've actually been cutting back for quite a while, for over 6 months now. Cutting back tremendously. I mean, talking major marketing cutbacks. And when I'm a marketing person and I want to keep increasing my marketing. All right, so that is it. Thanks for taking a look at the real estate market versus the everything bubble on the LA Loft Blog. As I mentioned earlier, a property information packet of any property or a private preview is available upon request. Also, during this time that people don't want to go in and look at properties, a video. We will actually go into the property for you, create a video. That way you could spend less time going into homes and save countless hours by not looking at homes that are not just right. You can look at the videos first. All you got to do is, if you see a property you like on the internet, let us know and just put in a request for a video walkthrough, and then we'll get that to you for free, that video tour walkthrough of the property. All right. I'm Corey Chambers in Los Angeles. Your home sold guaranteed or I'll buy it. Thanks for watching and take care. Bye-bye.